Chery Automobile shares have jumped over 11% in their Hong Kong debut as the company enters the electric and smart vehicle market. The battery maker CATL rose 6% to a record high, becoming China's third largest locally listed company. It now has a market value of $257 billion amid rising battery demand. Let's talk to Fiona Cincotta, the market analyst at City Index. Fiona, welcome back. Lovely to see you. So, Chery's strong debut in Hong Kong. What does all this tell us about investor sentiment towards China's car makers?
Well, as you noted, I mean, we had that really impressive performance. And if we just have a look at those IPO figures, delve a little bit deeper, we know that on the IPO, the institutional tranche was actually 11 times oversubscribed. The retail tranche was 308 times oversubscribed. So, you know, these numbers are really giving us a sense that there is strong demand for this stock, but more broadly for the automobile and the EV sector in China.
Given this rise in CATL and other battery and clean energy names, I mean, do you see a broader shift in capital allocation inside the Chinese equity market, or is this more of a short-term rally?
No, you know, I think if we look at the fundamentals here, they do appear to be very supportive. I mean, just having a look at, as you said, CATL, they are up 90% year to date, the share price. And as I said, fundamentals are supportive here. You know, you've got Beijing backing, you've got subsidies, you've got clean energy targets, and that, I think, really gives confidence towards the sector. And then you've also got massive investment infrastructure, which is also adding to this sort of bullish case. Obviously, there are always risks that one needs to be aware of. You know, I think, you know, rising costs of raw materials, supply bottlenecks, they could all be risks that would affect this. But I think, broadly speaking, the fundamental backdrop here is really encouraging.
And promise I won't play this back if it all goes pear-shaped, but what's your view on whether the tech and the artificial intelligence rally in China is going to go on and on? I mean, is it sustainable?
Yeah, again, you know, I think structurally there are sort of strong fundamentals behind this as a structure to this rally. Again, we're seeing, you know, very much state support for it, the use of AI in industry and embedding that into the economy. Then you've also got really high investments, large investments from those AI big tech companies. You know, we're thinking Alibaba, Baidu. They are investing very heavily here, which should result in revenue growth and profitability. So, you know, I think with those factors, and then there's also the fact that there is that difference in valuations at the moment. So you've got US tech stocks, which are really, you know, there is a sense that they are very much overvalued right now. So that could indeed encourage the rotation towards the Chinese tech sector as well.
Fiona, good to see you. Fiona Cincotta, the market analyst at City Index.